Welcome back, Deep Divers. We're kicking off a brand new series today, and this one's all about unearthing the wisdom of remarkable figures. Folks who've really made a mark. We're going to try to figure out what are the secrets to their success.
Sounds fascinating. I'm eager to hear who we're starting with.
Well, to kick things off, we're diving into the world of investing with the one and only Warren Buffett. The Oracle of Omaha.
Oh, Buffett. I have to admit, his approach to investing in life, it really resonates with people way beyond just Wall Street,
Absolutely. That's why we're starting with him. Plus, there's this really cool analogy he uses that always stuck with me. It's from Ted Williams' book, The Science of Hitting.
Oh, yeah. Baseball and investing, an interesting combo. Tell me more.
So Williams, he was all about waiting for the perfect pitch, right? The one right in his sweet spot.
Right. Be patient. Wait for the right opportunity.
Exactly. And Buffett, he took that idea and applied it to investing. He says there are no called strikes in investing, meaning he doesn't feel pressured to invest in just anything. He waits for that perfect pitch, that perfect opportunity.
I love that. It's about being selective, strategic, just like a batter waiting for the perfect moment to swing.
Exactly. And that's what we're going to be exploring in this deep dive. Not just the principles behind Buffett's success, but also how can our listeners actually use them to start growing their own wealth,
That's what I love about this show. You make these complex ideas, these big names, so accessible and actionable.
Well, that's the goal. So let's start with the man himself. For those who might not be super familiar with Warren Buffett, could you give us a quick rundown of who he is and why he's such a big deal?
Absolutely. So Warren Buffett's story, it's almost like something out of a movie. This guy was basically born with a passion for the stock market,
Oh, yeah. Tell me more.
As a kid, he devoured every book on investing he could find. He even spent Saturdays in his dad's office just absorbing business books.
Wow. Talk about starting young. I guess you could say investing's in his DNA.
You could definitely say that. And he took that childhood passion and turned it into an absolutely remarkable career. He honed his skills, founded Buffett Partnership Ltd., and was managing millions for investors.
That's incredible. But, when did things really take off for him? What was that pivotal moment?
The real turning point was in 1965 when he acquired Berkshire Hathaway.
Berkshire Hathaway? Wait, wasn't that like a textile company or something?
Yeah, it was. Not exactly the most exciting foundation for a financial empire.
Right? Not really.
Yeah.
So how did he go from textiles to, Warren Buffett?
That's where his genius comes in. He basically used Berkshire Hathaway as a platform, almost like a blank canvas to buy up all sorts of businesses.
Oh, I see. So it wasn't about the textiles themselves. It was what he did with the company that mattered.
Exactly. He turned it into his investment vehicle, a way to compound wealth over time. And, the range of businesses he bought is just mind-blowing. Everything from insurance giants like Geico, to household names like Coca-Cola.
So he transformed this traditional business into this, incredible investment powerhouse. That's pretty impressive. But what about Buffett the person? What are some of his key personality traits that contributed to his success?
Well, one striking thing about him is his focus and his curiosity. The guy is always learning, reading, and analyzing businesses.
Yeah, that makes sense. He seems like a very analytical and thoughtful person.
He is, but what's equally remarkable is his grounded nature. He lives a surprisingly simple life. He's one of the wealthiest people on the planet, but he drives an older car, lives in the same house he's owned for decades in Omaha, Nebraska.
That's really refreshing to hear. It challenges that whole stereotype of the flashy Wall Street tycoon.
It definitely does. But there's another twist to his story. You see, for years, Buffett was known as a pure value investor, always on the hunt for bargain deals.
Right. Makes sense. Buy low, sell high, right? So what changed?
Well, his longtime partner, Charlie Munger, had a huge influence on him. They started moving away from just hunting for undervalued assets, and they began focusing on high-quality businesses.
So it wasn't just about getting a good deal anymore.
No, it became more about finding businesses with a durable competitive advantage. They called it a moat.
Okay, moat. I like that. Makes it sound like a castle or something. Can you explain what that means in, simpler terms?
Sure. Imagine a moat like, the protective barrier around a castle. In business, a moat is what gives a company a unique edge.
So something that protects its profits from competitors.
Exactly, like a strong brand, a loyal customer base, or unique technology that's hard to replicate.
I get it. So it's like having a shield that makes a business more resilient, able to withstand challenges.
Precisely. And they realized it was smarter to, buy a fantastic business at a fair price rather than a fair business at a fantastic price.
That makes sense. It's like choosing quality over a quick bargain, right?
Exactly. And this evolution in Buffett's thinking, it's part of what makes him so intriguing, always learning, adapting, and refining his approach.
And speaking of his approach, I think this is the perfect time to move into the heart of his investing philosophy.
Yes. Let's uncover those concrete recommendations and insights. I'm excited to dig in.
Okay, so let's get into those secrets to success. What does Warren Buffett actually say about building wealth? What are those, golden nuggets of wisdom?
Well, one of his most fundamental principles might surprise you. Invest in yourself.
Invest in myself. Wait, I thought we were talking about, stocks and businesses and all that.
That's the beauty of Buffett's wisdom. It goes way beyond just the stock market. He truly believes that, your skills, your knowledge, those are your greatest assets.
Okay, I see the connection there. So how exactly did Buffett invest in himself? And how can our listeners, how can we do the same?
Let's take a look at Buffett's own life, right? Early on, he was terrified of public speaking, really scared. So what did he do? He took a Dale Carnegie course to overcome that fear.
Wow. That's a pretty proactive approach.
It was. And it paid off big time throughout his entire career. He's known for this, clear and engaging communication style, whether he's writing to shareholders or speaking at those big conferences.
So it's not just about being smart. It's about being able to convey that smartness effectively.
Exactly. Buffett also understood the importance of continuous learning. Always expanding your knowledge base. He's a voracious reader. He famously said, the more you learn, the more you earn.
I love that. The more you learn, the more you earn. So investing in yourself could be taking a course, reading, even just talking to people who are experts in their field.
Absolutely. It's about seeking out new knowledge, new experiences.
Okay, so we got invest in ourselves. That's a great one. What other wisdom does Buffett have to offer?
Another cornerstone of his approach is staying within your circle of competence.
Circle of competence. Okay, that sounds kind of simple, but what does it actually mean?
Imagine a circle, right? And this circle represents everything you understand. Industries, businesses, even your hobbies. That's your circle of competence. And Buffett's advice is to stick to making decisions within that circle.
So, if I'm a tech enthusiast, I should, invest in tech companies.
Exactly, because you understand the technology, the market, the competition. Buffett uses this funny analogy about chewing gum. He says, I understand chewing gum. I don't need to understand every other business to be successful.
So knowing your strengths, focusing on what you know best.
Exactly. And it keeps you from making, those impulsive decisions based on things you don't really get.
This is really insightful stuff. All right, what else? What other, pearls of wisdom does the Oracle have for us?
Here's a big one, and it might be his most famous. Think long term. Buffett is known for saying, our favorite holding period is forever.
Forever. Wow. That's a long time.
Yeah.
How realistic is that for, the average investor?
It's more about the mindset, right? He's saying when he invests in a company, he's looking at its long-term potential, not just, quick gains. It's about finding businesses you believe in and holding on to them. And that allows the power of compounding to really work its magic.
Compounding. That word keeps coming up. Can we break that down a little bit? What's so magical about it?
Imagine you're, rolling a snowball down a hill. It starts small, but as it rolls, it picks up more and more snow, getting bigger and bigger.
I see where you're going with this. So it's even small amounts invested, but consistently, can really grow over time.
Right. Your returns generate more returns. It just keeps building.
It's like you're earning interest on your interest.
Exactly. And the longer you're invested, the more powerful that compounding effect becomes.
This is seriously making me rethink, my entire approach to investing.
It's simple but powerful, right?
It is. Okay, so we've got invest in yourself, stay in your circle of competence, think long term. What else should we keep in mind?
Another principle that's key is understanding the importance of a moat.
Moats. We talked about that earlier, right? Those protective barriers that give businesses that edge.
Yep. And Buffett looks for that in every company he invests in. He wants businesses that are built to last, with strong moats that can handle competition and those economic ups and downs.
So how can we, spot these moats? What should we be looking for?
Think about things like strong brand recognition, a loyal customer base, or a unique product or service. Maybe even a cost advantage so they can offer lower prices.
Okay, so a company like Apple, with, all their brand loyalty and those innovative products, that would be a good example of a moat.
Absolutely. Think about how hard it would be for a competitor to just, come in and replicate what they've built. That's the power of a moat.
It all makes sense.
And along with moats, Buffett really emphasizes the importance of a margin of safety.
Margin of safety. Okay, I'm intrigued. Break that one down for us.
Imagine you're buying a used car, right? You'd want to pay less than what it's actually worth, just in case there's some hidden problems. That's your margin of safety.
Oh, so it's like a buffer to protect yourself, from any potential downsides.
Exactly. And Buffett applies that to investing. He looks for companies that are trading below their intrinsic value, so what he believes they're truly worth. This margin of safety gives you a cushion, protects you from those market swings and unexpected events.
That's really smart, like having a safety net for your investments.
Exactly. Reduces your risk and increases your potential for those long-term gains.
This is seriously good stuff. I'm sure our listeners are eager to hear, how can they put all this wisdom into action? What are those concrete steps they can take?
Well, let's dive into that. The cool thing about Buffett's approach is it applies to everyone, regardless of your financial background. It's about building those smart habits. It really is. Okay, so let's talk action, right? How can listeners, even those who aren't, like Wall Street wizards, actually put all this wisdom to work?
Yeah, that's the key question. Where do we even begin? What's step one?
Well, it all comes back to that first principle we talked about. Never stop learning. Buffett's a lifelong learner himself, always reading, absorbing information.
Yeah, and luckily, these days, knowledge is everywhere. We've got online courses, podcasts like ours, books, articles.
Exactly. No excuse for not educating ourselves, but where should we, focus that learning?
Good point. Where do we start?
We'll definitely start with the basics of personal finance. Budgeting, saving, understanding different types of investments.
Right, lay that foundation.
Exactly. And then as you get more comfortable, you can dig deeper into specific areas that interest you, things that fit within your circle of competence.
So if someone is super into tech, maybe they start by learning about the tech industry. And then, maybe they explore investing in some tech companies.
Exactly. Combine that knowledge with a focused approach, and you're way better equipped to make those, smart decisions.
That makes a ton of sense. Okay, so we've got education. That's key. But what else can listeners do to really align their actions with, Buffett's philosophy?
Well, one thing that's interesting about Buffett is, he's famously frugal.
Right. Lives pretty modestly considering, how much wealth he has.
Exactly. Still lives in the same house he bought back in 1958. Drives a car that's far from flashy.
We're not saying everyone needs to live in a tiny house, right?
Yeah.
But what's the takeaway there?
It's about living below your means. Not depriving yourself, but making conscious choices.
So mindful spending habits, really prioritizing those financial goals.
Right. Every dollar you save, that's a dollar you can invest. A dollar that can start working for you thanks to the power of, you guessed it, compounding.
And making your money work smarter, not harder.
Mm-hmm. Exactly. Okay, so now you've got some savings. Time to start investing. But remember, that's where your circle of competence comes in.
So no jumping on the latest, hot stock tip or blindly following the crowd.
No, definitely not. Focus on those industries or companies you really understand. Do your research. Read those financial statements.
This might sound intimidating for someone just starting out. Any tips for folks who are feeling a little overwhelmed?
Start small. You don't need a fortune to begin investing. A lot of platforms let you start with just a few bucks. The important thing is building that habit, investing consistently.
Consistency is key. What else?
Oh, and diversification. Remember that.
Oh, right. Don't put all your eggs in one basket. Spread out those investments. Manage that risk.
You got it. And don't be afraid to ask for help either. There are financial advisors, investment communities, tons of resources out there to help guide you.
That's good to know. There's a whole support system. But even with all the knowledge, all the resources, I feel like one of the biggest hurdles is overcoming that fear, really embracing that long-term perspective.
Yeah, it's normal to feel some fear, especially when you see the market, going up and down.
The market can be a roller coaster.
It really can. But remember, if you've done your homework, invested in solid companies with those strong moats, you're in it for the long haul.
Right out those bumps. Focus on the destination.
Right, exactly. And one of the best ways to stay grounded is to remember why you're investing in the first place. Think about your goals.
Have that bigger picture in mind. This has been such a great deep dive. Any final words of wisdom, maybe something from Mr. Buffett himself, that you'd like to leave our listeners with?
Ooh, okay, how about this? One of my favorite Buffett quotes, and one that really captures his approach, is, if you aren't willing to own a stock for 10 years, don't even think about earning it for 10 minutes.
Wow, that's a powerful statement. Really emphasizes that long-term thinking.
Makes you really think about the companies you invest in, see them as partners in your journey.
Not just quick flips. Make those decisions count. Well, I think we've covered a lot of ground today. Explored Warren Buffett's journey, his principles for building wealth, and most importantly, how our listeners can apply these insights to their own lives.
It's been awesome diving into this with you. And remember, folks, the journey to financial success, it's a marathon, not a sprint. Stay patient, stay curious, never stop learning.
Such great advice. And hey, who knows, maybe one day you'll be sharing your own investment wisdom with the world. Until next time, fellow deep divers, happy investing.